generally speaking, the point is like if you see something below a 6, that should trigger something in your head to reason to stop and think. Not like to just drop the deal or not proceed, but just to be like, okay, like that's not market, but I'm looking for something that offsets that. And this is the thing that it's interesting because a lot of LPs just don't want to hear this. Like they want it to be easy, or they just want to be able to wire the funds.
Sure.
But the reality is like these all investments are sort of like on a spectrum, right? And one thing might be like really good about it. For example, maybe the deal is phenomenal, but another thing might be kind of risky, such as it's the first deal that the GP is doing. So like everyone needs the first deal. At some point, you always do your first deal.
Yeah.
But are you comfortable taking on that risk? And perhaps it's offset somehow by the fact that you get better economics because it's the first deal that the GP is doing. Maybe the deal is underwritten well. Maybe they have an institutional background, whatever it is. You know what I mean?
You're listening to the Accredited Investors Only podcast presented by Accredited Life.
Awesome. Well, Aleksey, welcome to the show. How are you feeling today?
All right. Thank you so much for having me, Peter.
Thanks for being here. So I always like to start with you introducing yourself. Yeah, I'd love to hear people introduce themselves in their own words. So could you do that for me?
Sure. I guess the short and sweet version is I was on the principal side across several different strategies, most recently in real estate at a public company, and left and currently run what I would mainly call an advisory shop, where I advise limited partners on future transactions and existing transactions. Future ones is, pretty simple. If they're looking at something and they need feedback, they reach out. Existing ones, also pretty self-explanatory, typically around capital calls and such. I do some work for GPs, but it's pretty limited. And also I write pretty extensively on these topics and pretty active on Twitter and LinkedIn and such.
Yeah, well, and that's how we got connected. You put a lot of great content out there. What was kind of the driver for content? Was that something that came natural to you, or is that something that you kind of saw the writing on the wall, right, for years, that's how things are heading? If you want to grow your clientele and all, you have to do it? Or I'm curious to, your mindset behind that.
Yeah, so I mean, I've been on it for some time, first on Twitter. LinkedIn posting is, I think, how you saw me. I'm fairly new on LinkedIn, actually, in terms of like posting consistently. I first did quite a bit on Twitter. The short answer to your question would be, at some point I realized what's more important is who knows you rather than who you know. It sounds cliche, but I mean, I heard that at some point. I was like, whoa, and reach is a big deal in terms of finding customers, and staying on top of people too at scale, which is pretty powerful. I think one of the difficulties in my business is there's no there's no simple way to find LPs, right?
Sure.
And when I set out to run this business, I wanted to make sure that, I mean, as simple as to put it simply, like people know that I exist, right? Like, because 99.9% of people still don't, right? And too often I hear sort of horror stories after the fact. When they invested in something, they call me asking for feedback, and the call usually ends with, "I wish I knew about you earlier." So yeah, trying to put helpful content out there and see what happens, I guess.
Yeah, no, that's
I guess it led to this. I'm doing something right.
it's working, right? It's always a nice thing, to see when you put stuff out there. You have to have a vision, right? You gotta you gotta have this it's going to work eventually kind of thing. Because a lot of times you're gonna post something and are you gonna get people? Are the phone gonna ring right away? It has for me over the years, depending on what it is. if you're reaching the right platform. But I think you hit the nail on the head when it comes to, there's like not one unified place where LPs come together, so that you can hang out there and you're going to find them all the time. And I think a lot of times in real estate, I know a lot of people have had success with bigger pockets. But I think when you're talking with LPs and, accredited investors who are passively investing, for a long, how many are on bigger pockets actively? I think a lot of times people graduate beyond that. So it'll be interesting with passive pockets and all, how that will be able to recapture maybe a lot of those people who maybe felt that BP was, too much on the beginner side or on the very active, operational side. Whereas a lot of LPs aren't in that mindset. They're working, they have their other things going on, and they, this is a side kind of thing that they're looking to do passively. And even if it is full time, they're looking to go passive. So God, there's so much to dissect there, with just like your background and how you got into this. So I'm curious to learn a little bit more about your past with what you were doing and how it led to doing what you're doing today with advising LPs. So could you break that down a little bit for me?
Yeah, I think. Look, I came from the institutional world. Public companies operate a certain way. There's like a certain level of transparency, diligence, efficiency, right? And no company is perfect, right? To be fair, but I sort of saw that world, and then through various reasons, I got introduced to the syndication world, which just a few years ago I didn't even know it existed. Um, and I realized how inefficient, not transparent, opaque, whatever you want to call it, right? The marketplace is like I mean, I don't know how else to call it. It's almost like the Wild West, Peter. Like sometimes I see photos and like it's just like holy smokes, and like half the time they're like fully subscribed within hours. And of course the people on the other side like typically don't know what they're doing. And it's a difficult landscape, and I guess I was hoping to make a mark, slowly to sort of like bridge the gap between GPs and LPs, um, in terms of like the consistency and accurateness of information, because there's so much missing currently.
I completely agree with you. It's like an industry standard kind of a thing. Like you're saying on the public side, those investors you were dealing with on that side, were they private equity firms, institutions, family offices? Like, is that typically who were investing into those public companies, or?
So public companies are typically funded by like the shares, right? We also
Okay,
had
so they were doing that.
secured and secured debt, but like we also issued debt, we issued equity. Um, it's just like a totally different. Just a totally different landscape, Peter. I mean, like
Yeah.
it's the real estate, but it's like almost like a completely different ball game. Um, and I write about this pretty actively. I think there's like a lot of good reasons to invest into REITs, public REITs, and not do syndications. There's a lot of very good reasons to do syndications, and maybe diversify into REITs as well, but play in both worlds. They're inherently very different, even though the underlying asset is the same.
Mhm. That's a very interesting concept. And what do you feel with most LPs? Like, what is their take on REITs? Are they? I feel like a lot of the LPs that I deal with over the years, they're probably not too heavily invested in REITs at all, because they're more on that passive, it's that syndication side of the business, and they're more used to living in the Wild West world, and the returns are historically higher, right? I mean, that's what they're looking for, is higher returns. Do you feel the LPs you work with are they used to REITs? They invest in REITs and they're looking to branch into syndication world, or what's that look like?
I would say the average LP does not invest in REITs. I would also say the average LP should probably touch REITs before they invest in syndications on average. Um, I think, um,
Why is that? Is there like what are they going to learn from investing in a REIT that could maybe help to build a foundation to ease them into syndications?
Well, so I think it's not necessarily about learning. You can learn a few things, right? But it's more about and not investment advice, but like just in my opinion, right? Like the graduation of wealth, so to speak, is like first you touch the stock market, indices, right? Maybe some bonds, I don't know, maybe some gold, whatever. I don't know, do your thing, right? At some point you sort of graduate to a point where you're like, okay, like I want to diversify to some other stuff, right? The problem with diversifying to other stuff that is not so regulated, like a syndication world, is like as we just talked about, it's like the Wild West. And so if you're brand new to it, you have no idea if like you're literally looking at a deck that is literally a fraud,
Sure.
which I would say uh, true frauds are somewhat rare, but there's a ton of and when I say a ton, I really mean a ton of like decks that are not market at all in terms of like fees, structures, like um experience. I mean, you can go on and on. Like, and so like it is not actually that hard to stumble, right? And because of that, unless you're willing to spend time and energy to like look at, I don't know, 10, 20 deals, 30 deals maybe to invest in one, um, I would think like, yeah, it's probably better to invest in a REIT. Um, and then, by the way, just to be clear, I'm biased to tell you the opposite, right? I don't advise people on REITs,
Sure.
right? But like I just can't make sense of it, right? Meaning a REIT is, at least has some sort of gatekeeping mechanism because they had to go public. They have to like issue press releases. In terms of like your returns comment, um, I'm not an expert, but I think what people fail to think about is what is a typical pitch from a GP in the syndication world, which I, to be clear, think is um, deceptive or misleading. Maybe is a better word. Is like, don't invest in REITs because those guys are only giving you 5%, but we are going to give you 10%. Now, like, let's dissect that for a moment. Right? The reason why REITs only give you 5% is because they only give, they're like, by becoming a REIT, there's rules that you can look at, and there's something called AFFO. You're supposed to pay out a portion of your FFO, which is sort of like a proxy for cash flow, let's call it. And you're supposed to pay a portion out of that to your investors. So if you did that, like, that's good. And the rest gets reinvested.
Sure.
So like, that's actually good for you. And comparing it to like 8% pref is like, it's the tough comparison because like, did you deliver on that 8% pref the first year? No. Oh, okay. Well, it's not what I meant. Like, it's not actually, sometimes I accrue it. It's
Sure.
not current. Okay. But the REIT one is current. Like they've been paying a 5% dividend for 20 years or whatever it is. You know what I mean?
Yeah.
And that's not to say they can't stop it, right? So do your due diligence, right? Some REITs stop their dividends, just like private companies can stop, paying a pref and start accruing it. But my point is like, these things are kind of complicated. And like, unless you're willing to sit down and learn, I guess I wouldn't recommend like, betting like as if you're at a casino, you know what I mean?
Yeah, exactly. No, I know exactly what you're saying. And I'm sure a lot of the listeners can understand that because to your point, it's just there's no real industry standard. I mean, like I think there is in some ways, but in a lot of ways there isn't either. And
Oh, there isn't. Sorry, there isn't. Peter, there isn't. I'm telling you, like every single day almost, I get decks that you wouldn't believe are alive. Yeah, like, and you wouldn't believe that they get funded, and they still get funded. And there's people that fund these deals, and the problem is, like, to be clear, I think the SEC does a great job. The problem is they only have so many resources, right?
Sure.
And by the time they get involved in a case, it's already too late.
Yeah.
Like 9 out of 10 times.
Yeah.
First of all, the case has to be big enough, et cetera, right? And anyways, by the time they get involved, it's like you already probably lost your money, and that's definitely not a place you want to be.
So when an LP comes to you, I got to think a lot of what you do is somewhat like psychology based. Like how does the conversation go? You know what I mean? Like, especially if it's not, let's focus on somebody who wants to make future investments. Not the client that has an existing deal that maybe went south or they're doing a capital call or something like that. But for somebody who is looking for future investments, they come to you. What is that? What does it look like? What does the conversations look like? How do you help them?
Yeah, so I'm not a wealth advisor or an RIA, right? So like I have to be careful what I can tell them and whatnot. But the first thing I usually tell them is like, you should probably speak to someone that does that to sort of understand what allocations you should have to alternatives. And I publish my own opinions on this broadly, but I don't just sort of give those to any given individual. Um, my point being, like, I think only a percentage of your net worth should be tied into alts, right?
Sure.
In general, and I think at some point of your net worth journey, it doesn't even make sense to have any allocations at all. Like you should just be grinding and trying to increase your wealth.
Yeah.
In some cases, you're super wealthy, and it still doesn't make sense because you don't want to allocate time to it, and that's okay. You know.
Yeah.
I think it's a decision. I think that most of my conversations are, um, an LP has an investment that they're looking into. They send it to me. I go through like a very thorough process to review it, deliver a report, and the purpose of the report, I think is, it might surprise many, but it's actually not like, hey, this is a good deal, invest in it, or bad deal, don't invest in it. It's like uh quite the opposite. It's just like, hey, here's a bunch of things that I noticed in a deal that you should understand and ask questions about.
Yeah.
And let me know if you have any questions on them. And that does two things. I mean, I think that informs the LP about things that didn't know about. And oftentimes they'll catch all types of stuff. Some of which is on the deck, but most of which is not on the deck, as you can imagine.
Sure.
And the reality is that at that point, the LP sits there with all the information, and they're like, "Wow!" Like at the end of the day, they can only either invest or not invest, right? It's a binary decision. But I will start realizing that it's like pretty complicated. I have some questions that I don't understand. Like I don't even understand what Aleksey is asking, right? Like what does this even mean? In which case, we get on a call and I explain it, and they like learn, right? And the whole idea is to like help them become independent over time.
Sure.
And avoid the common pitfalls.
Yeah, no one takes some of the liability off of you too. You don't want to, because you don't have the crystal ball, right? You know what I mean? Like it's just
No, but that's
what you're saying.
the wild thing with this industry too, Peter, is like, you could have the worst deal in the world sitting in front of you by all marks, and then cap rates drop again, and the deal 5x's.
Yeah.
And it's like, well, wow. Why did you tell me not to invest in that?
Sure.
But that's the point, is like my goal is always to make sure people understand what they're getting into.
Yeah.
Like that's the ultimate goal. And then they decide if whatever is in front of them is interesting or not, whether they want to take on the risk or not, etc. But the goal is understanding.
Yeah, well, I think that's very, very important. And I know it from personally, because I as somebody that raises capital, works with a lot of LPs, I there's people that have been with me for years, and I'll get phone calls, and it's just like, and you can tell they don't understand something, and it drives me nuts because I feel like one of the goals for a good GP is that understanding, is making sure your LPs understand, not just the existing ones, but potential. That's how you're going to be able to raise money. And if people could understand things the way that you do, and it's challenging, it's really challenging, especially when you work in the business every day and you're trying to communicate things to people that don't, to be able to meet them on the level they're at and explain things in a way that they're going to understand, all that kind of stuff. So, for you to be able to do that, and for people to be able to have somebody like you to go to do that, that definitely fills a need in the space without a doubt. So what is it? Are there certain things that that you look for with the GP? I asked that question where I'm sure I know the answer is yes, but what are they? Yeah, I mean, so like when you look at a GP, what are some things that stand out that you like, and what are some things that stand out that you want to run the other way?
Loaded question. I guess I'll mention a few. I have never published any red flags publicly, with the exception of a few things. In other words, what I like to refer to is, I guess you can call them like yellow flags or reasons to stop and think, right? And so I'll give you an example. You open up a deck, and I'm sure, as a GP yourself, you can relate. You open up a deck and it says 3% pref, 0 pref. It says 0 pref. And then I get a call from an LP and like, my friend sent me this deal and it says 0 pref. What a disaster. Like, why would I ever invest in this? I'm like, did you go to the next page? No, like I just threw it out right away. I just wanted to call you because I was pissed off. I'm like, okay, but did you see the next page? Like, go back. And then they call me and they're like, oh, like, yeah, there was a 50% co-invest. Oh, and the split to the LP was 95%. But maybe that's why there was no pref. I see, So my point is, like, as an example, on the pref number, I usually guide people to like something above 6. Things have moved closer to an 8 recently, right? But generally speaking, the point is, like, if you see something below a 6, that should trigger something in your head to reason to stop and think. Not like just drop the deal or not proceed, but just to be like, okay, like that's not market, but I'm looking for something that offsets that. And this is the thing that it's interesting because a lot of LPs just don't want to hear this. Like they want it to be easy. Well, I just want to be able to like wire the funds.
Sure.
But the reality is like these all investments are sort of like on a spectrum, right? And one thing might be like really good about it. For example, maybe the deal is phenomenal, but another thing might be kind of risky, such as it's the first deal that the GP is doing. So like everyone needs the first deal. At some point, you always do your first deal.
Sure. Yeah.
But are you comfortable taking on that risk? And perhaps it's offset somehow by the fact that you get better economics because it's the first deal that the GP is doing. Maybe the deal is underwritten well. Maybe they have an institutional background, whatever it is. You know what I mean?
Yeah.
So I like to refer to these as sort of reasons to stop and think. People can sort of find like a whole list of them. I call them top 15 syndication mistakes. I'm pretty sure you can Google the article and find it. In terms of like actual red flags where you sort of put down the deck, so to speak, I published a few of them, but they're very few because I think those are very strong opinions. So probably the biggest one is no return of capital clause. It's rare, but it happens that like the return of capital clause is not included in the waterfall prior to the GP promote, and I just don't think I would say 99 out of 100 cases that means you should put down the deck.
Just eggs, and so I know that I'm thinking of the right thing when you say return of capital.
Yeah, sure. So like a typical waterfall will be pref first, right? Then a return of capital. In other words, like the LP gets their money back.
Yeah.
Right. They invested $100. There's an 8% pref. So first you got to pay $8 in a given year. Then $100 comes back. The next $100 comes back to the LP, right? And only then you hit the promote, which is the 80-20 split or whatever it is between the GP and the LP. And I've seen cases where like that return of capital is just completely skipped. In other words, like you do pref. Sometimes I've seen actually no pref too, and then you just like literally just go to a split. and that is like quite literally the reason to, like, probably never speak to the GP again.
Yeah, that's a really good point.
That's number one. Any word or like mention of guarantee is usually another reason.
That pretty sure that's illegal to say that. You hear that, but yeah.
Yeah, but so many times the feedback that you'll get is like, it is guaranteed. Like, I know that I'm gonna pay it. And it's like, okay, well,
Oh God.
that's not like guaranteed. And they're like, okay, well, it's still guaranteed because I'm personally guaranteeing it. I'm like, okay, are you gonna provide me your personal financial statements? Are you going to personally guarantee this investment alongside with the collateral that I'm investing in? Of course, the answer is no. Okay, so then you're not personally guaranteeing it. Like, what's the point of this language? So anyway, so like I've written like, lengthy articles about this, but basically, again, like 99 out of 100 cases where a deck has the word something is guaranteed, it's probably a reason to like walk away.
And chances are their securities attorney hasn't reviewed that either, which is scary because if there's anything like that, but man, maybe there's attorneys out there that will let stuff like that slide, but yeah, that's scary.
Yeah, I mean, to my surprise, I've seen this from. It was not surprising to see it from unexperienced sponsors, even though it's still wild to see it. But that's why I call it, the Wild West. There has to be some wild in the Wild West. But at the same time, I've seen it from like fairly large sponsors.
Wow.
And I don't. Maybe they got desperate and they just wrote it in there. I don't know. And again, they start sort of they start explaining themselves as to how it's guaranteed. For example, maybe you pre-funded a dollar amount. Wow, okay, right? And you are using that dollar amount in escrow to pay off those pref returns that are quote unquote guaranteed. And it's like, well, okay, but then I'm just like, I guess it's closer to guaranteed if the escrow is held by third party. But like, why am I pre-funding just to give myself money back?
Sure.
It's like, it's just like whichever way you turn, you just start having questions and like, I don't know.
Yeah, it seems like a silly thing to. It's like the LP should be understanding if they're investing in a 506C, B, anything. It's just that nothing's guaranteed. Yeah, and so you start to question why are they going that route? Why is that important to them to want to, especially to defend it like that? That's insane. Anything else like that kind of stands out to what's your thoughts on what's your take on marketing and all? I mean, like I'm always interested when I see GPs that are very, very, very active on social media. And I understand with AI now and virtual assistants and things like that, you could do more now than ever before with a lot less effort and energy. But it's always curious to me, I feel like I'm pretty busy and our company's pretty busy and we're vertically integrated. So we do all of our construction and property management and stuff. So it's not like we're just working with a third party manager, and have review calls weekly or something like that. But it always blows my mind. I see these people spend so much time on social media. For somebody like yourself, what do you think about that? When you see a GP who's like all day, every day in forums, posting, going back and forth and all. What's your take? I'm interested.
Well, I think that maybe I'll flip my take into two takes. From the perspective of a GP, you would actually be surprised how effective it is. Because you sort of build trust blindly.
Sure.
And people watch you over time.
Yeah.
And they, this is all I would say from an LP perspective, probably not great, is that they almost like feel like they know you because they followed you for a year and you've never spoken, but you're ready to wire a check without doing any diligence. And I mean, I see this all the time, and obviously you can imagine what my thoughts are there.
Prior to starting my company, that was the guy that I work for wrote articles. So it wasn't like a podcast or videos. It was articles, and the amount that people felt like they knew who he was just through reading an article a week. It's amazing. It's powerful. But now I'm sorry to cut you off. Keep going.
No, it is. It really is. And I think I mean, it would be crazy to me if I didn't say that I think it's the future. Like,
Mhm.
I mean, I think there's sort of, people tend to appreciate thoughts and learning before getting into something. And the question, of course, this is the $1 million question, is like, from the LP perspective now, meaning from the GP perspective, it sometimes it makes sense, sometimes it doesn't make sense, because it's a lot of effort. To be fair, you got to consistently post. It's a lot of work. But if you do it right, like, people have literally raised like hundreds of millions off Twitter, literally.
Yeah.
And same with LinkedIn.
Yeah.
Now,
Even Facebook.
yeah, Facebook. I don't know. I don't know what it is with me. I have a Facebook account, but like I feel like there's actually more money on Facebook than the other platforms. I just haven't gotten like, I don't know. Every time every time I open my timeline, it's just like a bunch of trash. I'm like, where am I here?
Yeah. No, it's I think it's becoming oversaturated. If you look at one deal, every other post in my like feed, whatever they call it, is a deal. I mean, it's somewhere 8 to 12%. Fixed rate, private credit funds, syndications, you name it. It's unbelievable. And I know people that have invested in that stuff, and and they have conversations, so it must work to some degree. And I think it's a numbers game, but yeah, it's unbelievable the amount of commitment that goes into all that kind of stuff at all.
Yeah, people spend real time on it. I think from the perspective of an LP, I guess I don't know if I've ever said this publicly. Maybe they'll see what happens. There's sort of a correction that needs to happen in LP's brain, in my opinion. When two things happen. So like when a friend is like, "Hey, I'm invested with this guy. You should invest too." So the correction there is actually like, okay, good. That's really helpful. I got a referral. But that does not mean I should just blindly trust that A, this person knows what they're doing. B, maybe his investment or her investment is like underwater and they don't even understand it. Right? There's a million things that could happen that I've seen happen. And so the correction there is like, okay, this is helpful, but like, whoa, like, take a step back. Like, I need to do some diligence, right? And many times people don't do that, and they're just like, oh yeah, like, I've never gotten like a friend who's been invested with this GP to recommend something, so I'm going to invest. And bad idea. And then on our topic now, like, what happens if I'm like on Facebook or Instagram or wherever, and I see an ad? Like, can you click on the ad? Sure. Like, why not? You can click on it. You can get the information. Sure. But I think the correction needs to happen. I mean, I think it's fair saying this. Like, I think there's more the bad deals that are advertised than good deals by and large.
Yeah.
That's not to say that someone who advertises is bad or they're advertising a bad deal. It's just the population. The chances of you seeing a good deal is low. Like, I don't know how else to say it.
Or there are people that feel that way about crowdfunding, where it's just like they don't even look, they won't even touch it, because it's like the good deals in their mind, closed door, good old boy, who kind of thing, and so anything that's public knowledge or something you're finding on Facebook, it must not be a good deal. And I like your attitude towards you don't really seem to have like you're not like a black and white kind of a guy. You're living in the gray area where it's like you're always, when you see something, you're asking questions about it. It's not just completely like, okay, I'm done, turn it off, close the book. Now, there might be a few things that are like that, but for the most part, I think that's refreshing, because I think a lot of people, at least on social media and all, like they feel like they have to be that way, where it's either black or white and that's it, but it's very interesting to hear just your mindset around how it's not, it should draw up questions. And I think that's so important, because I think at the end of the day, what can an LP really do? I always think it comes down to the questions that they ask. And and even so, like, it's a lot of times like with certain questions, you think, how are they going to answer those questions? You know what I mean? If the GP knows anything, he should know what to say at least. You know what I mean? So, but at the same time, I always feel like it's the questions that you ask that lead to the information that you're going to get, and the information is going to lead to whether or not you can make a good decision, that kind of thing. So, and I love what you're saying. It sounds like you
Yes.
help people ask good questions.
I would also just reiterate, or not reiterate, just add. Questions are big. The problem with questions, especially on a phone call, is like it's very easy to divert. Like if you're a GP in business for, I don't know, 5 years, it is so easy to like jump around an LP's question, and not actually answer anything. I'll give you a simple example. An LP calls a GP and they're like, "Hey, like I'm pretty interested in this. Like, you guys seem great, love the deck, beautiful, blah blah blah. I want to invest 500 grand, blah blah. Just one more thing, like there's all these capital calls going around, like a lot of distress. Have you lost any LP's money?" And the GP says no. The LP invests, not realizing like half their portfolio is a month away from foreclosure. Now, okay, like, so stop. Did the GP lie? Kind of complicated.
Jesus, yeah.
It's kind of complicated, right?
Yeah.
Because
Yeah.
like, I mean, I just to be fair, like on that date, they did not sell something that caused the loss to the LP.
Yeah.
Now, I would say that's a pretty misleading way of answering the leadership, right? But misleading isn't necessarily like lying, right? Because if you ask them honestly, like, hey, how would you value the property? And like on paper, like how much is the LP position worth? It's worth nothing. The property is worth less than the debt, right? But I mean, there's so many examples of this. My point is, like, going back, I guess, we started with the Wild West and we're back.
Well, and I want to be conscious of timing too. So, but that's such a good way to circle around, because in my mind, when you're saying that, and I was trying to say that as well, because it's just, at the end of the day, you're taking a risk, right? And no matter what, referrals, the content that you read, how much you feel the person, or the deal, or whatever it is, at the end of the day, it's a risk. And how would you say, what's your thoughts on diversification? Let's wrap it up with that kind of, I feel like some people have different thoughts on diversification, and I probably have some idea, because I like what you're saying about REITs. You know what I mean? Like, so it's, because you kind of have some foundation there at least, and there's just a different risk level there, and the return reflects that. But I'm curious.
And liquidity, by the way.
Yeah, exactly.
Yeah, and liquidity. People forget about liquidity until they need it. Yeah, just so in terms of diversification, look, question one, should you allocate any dollars to syndications? Question two is, if you decide to do it, very good. How much should you put out to any given GP?
Yeah.
And or any given asset class, right? And like, depending on how many dollars you're dealing with, you can sort of like imagine how this gets a little bit complex, right? But that's what I'm saying, and or. The last thing I'll just note is like getting a dividend. I mean, I don't know how else to say this, but I've heard it so many times. Like, I get so excited. So excited. Like, it was a month, and they got my dividend, and it was exactly 8%. And you know what I did? I invested more.
Yeah.
And I mean, oh my gosh,
That's literally how a Ponzi scheme works. It's just like it's supposed to work.
So okay, I wouldn't go that far. Like, I don't think these are Ponzi schemes.
No, I know. But I've heard that a million times, and it's just a funny. It's funny. Yeah, it's a funny way. It's like driving 100 miles per hour and never getting pulled over. It's like, and not yet.
Yeah. But my point is just like the LP confuses like sometimes beautiful reports come on time. They have like zero value whatsoever in terms of like how their actual investment is doing, but there's plenty of dog park pictures and whatever else. and they're just like, wow, the reports are on time. They really know what they're doing. The charts are nice. Like the dividends come every month. Like I'm gonna plow in some more. And I'm just like, I don't know. I'm not sure. Look, at the end of the day, it's like the LP's decision. Generally, I would say it's probably a good idea to get very close to an exit or maybe to an exit before reinvesting, because you just don't know. You don't know what you don't know. And everyone is nice when good times are there. You know what I mean?
When things are good, exactly. That's always been my take on tenants. It's just everything's fine and dandy until shit happens in their life, and then they're gonna do what they got to do. It's just, I don't take anything personally, but that's great information. Wow, I could talk to you for a lot longer, and I have a lot more questions for you. But for now, how can people find more about you? How can they follow your content and get involved with you, Aleksey?
Yeah, sure. I mean, I think my name is pretty unique. Not like super hard to find. I post usually several times a day on Twitter and LinkedIn or X. And I also write twice a week at lplessons.co, which is CO. You can also reach out to me. Email is Aleksey, first name at centriocapital.com.
Awesome. Well, thank you so much for being here. This was a great episode. A lot of great information.
Thank you so much for having me. Appreciate it.
Awesome.